market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, another packed show today, the week ending with the same question. Has the AI bubble, or has AI become a bubble? We get the thoughts of the Bank of England Governor Andrew Bailey a little bit later in the program. On the trade front, a Bloomberg scoop with the Dutch ready to drop control of the chipmaker Nexperia if China resumes exports of critical chips. Plus, corporate history is made with Elon Musk on track to become the first ever trillionaire. Now, with me this morning to discuss all of this, Klaus, Global Chief Economist at SocGen Corporate and Investment Bank, Bloomberg cross-asset reporter Justina Lee, and Bloomberg's Global Autos editor, our card czar, Craig Trudell. So thank you all for joining us. Justina, maybe set the scene for us. I mean, there is a little bit of buying in the markets today after what was a pretty difficult and volatile week.
Yeah, exactly. And, you know, what we're seeing kind of in these couple of days is like a classic risk-off rally where we're kind of risk-off kind of market trade, where we're seeing kind of stocks plunge and at the same time bonds rallying. And all of that is on the back of these kind of jobs data coming from kind of the Challenger, which is a private firm. And I think that really highlights the data vacuum that we're at, right? Because a lot of these jobs data that are coming from these alternative sources, I mean, they come with a lot of asterisks, but the picture they both seem to be pointing at is pretty clear, which is that we're seeing more job cuts across the U.S. And at the same time, people are kind of concerned that the Fed might not be here to step up with more rate cuts, kind of with what we've heard from, you know, Chair Powell lately, and also some other Fed officials that are still raising alarms about the inflation rate in the U.S.
Yeah, Klaus, I mean, it's interesting because, again, the market has these like moments of correction, but and again, we don't have market data for the U.S., so unclear what it means for the Fed, but the economy still feels okay. The fundamentals haven't really shifted.
No, they haven't. But of course, there's been a big cloud of uncertainty over the U.S. economy. And I think that's really having an impact on employment. It's a kind of no hire. It's not no fire, but it's also no hire kind of economy. And of course, it makes companies rather reluctant to invest. Markets had gotten incredibly aggressive about pricing rate cuts. Excessively so, as we've argued. And they got definitely a bit of a jolt after the last FOMC meeting with Chair Powell saying that a rate cut in December is not a foregone conclusion. Far from it. And markets, I mean, at one stage were discounting literally 110% probability of 50 basis point cut to the end of the year, i.e. they were discounting that one of those cuts could be a little bit larger. Yeah, there's just a huge variations of opinions on the FOMC.
So, Klaus, so first of all, when you look at, you know, the data that you're trying to look at to decipher actually what is going on in the U.S., I mean, do you have enough to go by in terms of just the private stuff?
No, absolutely not. There's a whole variety of indicators. We had the ISM data earlier in the week, and at the moment, of course, people are particularly looking at the employment component. They are below 50. Now, do I believe that necessarily means that employment is shrinking? No. But it's certainly not strong, and there's been a sizable correction. You should really look at the services more in manufacturing, just because of the relevant weight. You know, ADP, we know that its correlation with payrolls is very hit and miss. So no, we don't have enough data, neither on economic activity, on the labor market, or for that matter, on prices. Now, there still is the issue, to what extent and how quickly are tariffs feeding through? I think they still continue to do so.
Yeah, and then we have the Supreme Court about tariffs. We'll get back to that in a second. Elon Musk never really far away from the news. I mean, yesterday was a pretty incredible day, Craig. Tesla shareholders approving a $1 trillion package for Musk.
Yes, and in order for him to realize that headline figure, he's going to have to do a lot. He's going to have to bring Tesla from a $1.5 trillion company to $8.5 trillion sometime over the next decade. He will have to bring adjusted EBITDA for this company, which will be something on the order of $13 billion this year, to $400 billion. Whether he will ever actually realize all of the stock that this lines up for him remains to be seen. but if we take him at his word last night, he was really on one in terms of the future of this company, talking about his robots being able to perform surgery, actually maybe even sort of following people around so that they don't commit crime. So new use cases beyond just electric cars and some more details for his humanoid robots. A lot of things maybe to be taken with great big grains of salt.
Yeah, I mean, we'll definitely take it with big grains of salt. But at the same time, as we talk about the AI bubble, and whether there's going to be a correction, does this point to the fact that shareholders maybe are optimistic that there's something there, that he can turn it around, but also grow it significantly in terms of revenue?
I think it speaks to the ability that he has to command narratives around AI, right? Because after all, this robot that he says is going to, be the new best surgeon, better than any human. He doesn't even have it in production yet. So this, I think, is very consistent with this broader theme of a lot of hype and anticipation about what AI will be able to do. The sort of here and now reality is another question.
Justine, one of the other big stories, and again, it talks to AI, and it's this chip control at the moment where we're seeing the U.S. and China getting along a little bit better. It seems certainly to lay the groundwork for some kind of agreement. And then the Netherlands this morning saying it's prepared to suspend its powers over Nexperia if China allows exports of its critical chips again. I mean, is that really a breakthrough moment for Europe?
Yeah, I think for sure, and it will be kind of definitely kind of news of relief for a lot of automakers all across the world. So what we're hearing kind of from our sources in the Netherlands is that the government is prepared to suspend what is called like a ministerial order that's given it kind of control to key corporate decisions at Nexperia, kind of on the condition that China does allow kind of more exports from kind of Nexperia's like critical chips over the coming days. And another good news is that the Dutch government has said that they do expect the resumption of these chip supply kind of over the coming days. And in that case, then maybe this order can be lifted over the next week. And I think that would be good news for a lot of car companies because they've been talking about sort of the supply issues when it comes to these power control trips that have been critical to them.
And Klaus, I mean, to that very good point, it does seem that tensions are easing full stop between the U.S. and China. We don't know for how long, but how much does that help the global economy?
I think it's very important. We spoke earlier about the uncertainties that come not least out of the U.S. tariff policy. Then, of course, the reaction of China. China has definitely flexed its muscle here, and not only towards the United States but towards Europe. And the Nexperia case was really very worrying. Volkswagen had actually announced that they were very soon needed to reduce production. So I think it is good news, but at the same time, China has asserted its iron grip on global supply chains, particularly in the critical materials. They're not that rare, but nowadays referred to as critical materials.
It's rare to mine them properly.
Exactly, and refine them too. And they're not going to let go of this. So, some people argue that China won the trade war, and I think they have a point.
So, but do you think that now they're on a better footing, or actually are we going to see loggerheads between these two superpowers so that investors and therefore the economy is still going to be in a constant wait-and-see situation?
I think more the latter. It's difficult to imagine that suddenly, at least during this administration, suddenly the attitudes towards China are going to dramatically change. China and the U.S. are in many ways in competition. Now, of course, the U.S. is a much wealthier economy, no doubt about it, but they are in a strong competition, and the Europeans are kind of stuck in the middle.
Craig, I mean, we've spoken in the past a lot about what Elon Musk wants to do in China, what his ambitions were in China. I mean, in general, he's been pretty quiet on China, but also on the U.S. government. We're still in a massive shutdown. He tweets less.
Yeah, he's very much caught in the middle of these two because while the car business has been flagging for Tesla, they did, I should give them credit, they did have a record third quarter, but even with that record third quarter, year to date, their sales are down. On the other side of the ledger for them, their energy business has been quite strong. The challenge for that side of the business is the fact that they are reliant on cells from China for their battery storage devices, and the demand for those, especially with this AI boom, boom and sort of the demand for energy for data centers, there I think is a very credible argument to be made that they could be selling a whole heck of a lot more of those if it weren't for the fact that tariffs on battery cells from China are so substantial. So whether or not Musk can sort of get back into Trump's good graces and maybe broker some compromise there, I'm sure it's something that he would like to do ideally, but I think we shall see.
We shall see. Just, we had a couple of market events. I mean, I don't know whether gold up and down is a market event. It feels like it because, again, it's maybe a de-dollarization of U.S. assets or something like that. We also had the Bank of England. What are you looking out for over the next, 2 to 3 trading days?
I think the key question here is what's going to happen to what is now the longest U.S. government shutdown in history. Now, we haven't really heard much lately about any deal coming up. But, with the string of Democratic victories that we've seen in the election this week, is that going to put any pressure on the Republicans to maybe start to broker a deal? These days we always look at prediction markets, and it seems like, a lot of people are still betting that there is chance of a deal maybe by the end of next week. And I think that really will be critical here, because we've even heard from Fed officials that, they're struggling to gauge the picture of inflation kind of without any official data. And of course, we talked earlier about how we're all relying on these private sources on the employment picture here. And I think everyone's kind of waiting for those key payroll figures.
Klaus, what do you look at? I mean, away from the lack of data, is there something else? We had the ECB last week. We had Bank of England this week. I mean, again, some central banks have an easier job than others because of structural things in their countries.
Yeah, but for a lot of central banks, the situation is pretty difficult. And that's true for those that want to raise rates, like the BOJ. Our expectation had been before the election that they would probably raise rates in October. That looks more likely in December, but the risk are they go later. The ECB, fortunately, is done for the time being, and there might be another, one last cut to avoid next year when inflation could go very low, of inflation expectations becoming unanchored to the downside. The Bank of England's in a difficult situation. Another one is the RBA. The easing trend of the Reserve Bank of Australia also now looks to be blocked for quite some time because inflation pressures have picked up quite substantially. I think it's remarkable how diverse the inflation picture is across even advanced economies. We don't even have to talk about advanced economies and emerging economies. Historically, emerging economies have been the ones with the inflation problem. Not at this current juncture. So there is a lot of diversity in central banks. I did say, and funny enough, Powell said the same thing. In dense fog, you don't want to drive very fast.
No, you don't want to drive very fast. But the concern is also there's a huge debt problems in a lot of the G7 countries. So you see it playing out in France with a lot of political uncertainty. Frankly, the Bank of England has to deal with a budget, which once again is uncertainty, and that's a money problem. So how do you see that, being tied up in 6-7 months?
Well, I think it puts additional pressure on central banks to stay absolutely credible on the inflation front, because there is nothing more damaging to government longer-term financing rates than a central bank that is seen to be playing fast and loose with its inflation mandate. I think that's, for central banks, an absolutely key factor, apart, of course, from managing the economy as best as they can.
Okay, well, thank you all for a terrific way to start the show. Craig Trudell there in charge of our autos coverage, Justina Lee, as well as Klaus Bader, Global Chief Economist at SocGen CIB. Coming up, more of our interview with the Bank of England Governor Andrew Bailey. That's next, and this is Bloomberg. The conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the Bank of England held interest rates at 4% in a tight vote that laid the groundwork for a December cut. Attention now turns to the UK Chancellor Rachel Reeves, whose budget later this month must avoid fueling inflation in order not to derail the Bank of England's path towards a cut. Well, the governor spoke to Bloomberg following the decision.
Now, in August, I would say I was concerned more on the upside risk. But I think the news that we've had subsequent to that has left me in a more balanced position. So that was very much my view. But as I've said a number of times, we do need to see more evidence, because so far we've had one inflation number that's come in under what we thought, which is obviously good. We need to see some more.
So what would sway you actually for December? And when you say that it was balanced, does it mean that one extra data point would have made you want to cut?
By December, we'll actually have two, because we have 2 months worth of data between now and our December decision. So we'll have 2 sets of inflation numbers, 2 sets of labour market numbers, 2 sets of most other numbers as well. So that will be important. Now, I think the conditions at the moment suggest that policy remains restrictive. We've passed peak restriction, I think, but that's not surprising. We've been cutting rates, and no surprise there. That's what we intended. But I think it remains restrictive for the moment.
Governor, you've also said that decisions become closer calls as we near the end of the easing cycle. Does that mean that we could have bigger pauses in between cuts than we currently have?
Well, I think that really depends, of course, on how conditions evolve. I think the point we're making there is obviously the nearer you get to wherever this sort of neutral rate is, you're going to be slowing you've got to land the thing actually in that sense. I think that's the point we're really making. So, as we come down the sort of the path, you would expect some, we've got to land it. Hope.
So longer pauses.
Well, at some point, you'd like to think, obviously, we're in a sort of neutral condition, as it were. I mean, that will always depend upon the shocks that we're seeing, of course, around us as to how those evolve. But you'd like to think we'll get to that point. I'd like to think we'll get to that point.
Governor, I know the BOE doesn't assume anything about the budget, and of course you take fiscal policy as read when it's set out in the budget. But as Governor, what would you like to see most in terms of broad fiscal impulse from the Chancellor?
Oh, well, I'm going to wait for the Chancellor to announce it on the 26th of this month.
How would you describe your working relationship with the Chancellor?
Oh, very good. Very good. We talk quite often. It's a good relationship.
Right, just a quick final question. Nigel Farage told us, speaking about you, that this is a quote, he's had a good run, we might find someone new. What do you say to that?
Well, I made a commitment to serve out my whole term. That's what I intend to do, and there's no desire to change. It was a very cordial meeting we had. You may have seen the letter that I wrote following the letter that Richard Tice wrote to me. I wrote quite a long letter back explaining particularly these 2 issues, QT and interest on reserves. There were some differences of view, but we had a very cordial meeting. I intend to serve out my full term as governor.
Well, that was Bank of England Governor Andrew Bailey. Now, President Donald Trump said he would look to diversify critical mineral purchases during a meeting with 5 Central Asian countries yesterday. As the U.S. seeks to address China's dominance in rare earths, the EU is privately warning that there's little it can do in the near term to compel Beijing to ease export controls on the material. Well, joining us now is Katherine Ogundiya, thematic investing analyst at Barclays. Katherine, thank you so much for joining us. I mean, rare earths are like, the end-all and be-all of what we need, but it's not that they're that rare. It's rare to mine them and refine them properly.
Precisely, and that's a big misconception. There's this assumption that because of the word rare, we just don't have enough. The real challenge and the real bottlenecks are both in the mining from a regional perspective and then on the processing, which is where the EU and the US is really looking to sort of step up its efforts.
So what does it mean in terms of exploration, but also in terms of recycling? Can you actually recycle this?
Very good question. So when it comes to exploration, you have rare earth and critical raw materials really displayed globally. China's got about 60% of sort of rare earth deposits. When it comes to the processing, their sort of appetite sort of reaches like 90%. When it comes to recycling, it's an interesting opportunity, but not all rare earth and critical raw materials can be recycled equally. From our research, it appears that magnetic rare earths have got the highest recycling capabilities, which is also positive because these are the materials that are going to be really important in uses such as EV batteries, thinking about defense applications as well. So promising, but it's going to take a long time to get sufficient recycling capacity.
Is it as easy as recycling copper, or is it much more difficult because there are small components and actually it's quite difficult to get to?
Precisely. I would say it's probably closest to recycling, say, an EV battery. So you're using existing technology, which is encouraging. When we conducted our research, we weren't going to focus on recycling technologies that are on the near frontier, but using existing technologies, you can recycle particular rare earths, again, particularly sort of the magnetic ones, but as you mentioned, it's not just about being able to recycle them. You need to be able to collect them. When you get your rare earth, normally found in electronic components, where collection rates are incredibly low, you need to be able to get sufficient quantity to be able to recycle them. And that's the big bottleneck where we haven't seen policymakers really address yet.
So is the first step trying to find a reliable supply chain? So is everyone calling, some of the countries that have them and refine them and trying to make deals?
It's interesting. I would say policymakers seem to be focusing on the end of the value chain. So a lot of the support has been focusing on companies who've got recycling capabilities, recycling infrastructure. That's where a lot of the financial support has been given. I would argue that the front end, where you need to get the supply chains, the spent waste, collection schemes, maybe requirements to have mandatory recycled content in devices, that has really been left. So I think there's a bit of a gap. It's been a bit of a chicken and egg situation in Europe and US looking at policy and investment so far.
Katherine, it's very, we can't underestimate how much the green transition and also this burst of AI will do in terms of demand. So where are we in supply? I mean, if we were, not to buy anymore or recycle anymore, how long would we have left?
That's a really good question. I wouldn't say it in that particular way. I would say that recycling, when it comes to rare earths, isn't something that's going to mix the needle right now. Okay. Only 1% of rare earths are globally recycled, so it's really not making a material difference to supply chains at the moment.
When do we need to have more by?
I would say if you look at sort of IEA data sets, by 2040 you're expecting recycling capacity to double. So that's quite some time when you're thinking about sort of capacity. So I think in the short term it's really thinking about, are there alternative materials? Are you able to sort of broker broader deals? Are you able to look at sort of exploration and processing? Recycling is a long-term solution, but will need consistent policy, investment and time to really manifest into something material.
So is the EU, for example, trying to go not against the US, but are they competing with the US, or can they both do their own thing?
I think there's space for both, because if you think about where rare earths are going to be, I think the smart way of thinking about it is once your electronics enter your market, you've got critical raw materials right there. So thinking about data center rollout, thinking about data center upgrades, there's a huge amount of rare earths in, say, wind turbines, all within your particular region. So if you can focusing on your domestic supply chain and your domestic capacity, actually there should be a sensible amount of resources to start processing and recycling.
How much money do we need for this? Or how much money does the EU, and does it have it?
Well, that's the thing. The EU has focused particularly when it comes to critical raw materials in its broader act. They've sort of highlighted about 60 projects that they want to fund, giving about 500 million to each project. And to be honest, this is ranging from exploration, recycling and processing. It's hard to create a sort of a single figure for this, but the number is incredibly high and the time is going to take a long.
Is this private money or is it public money or is it a bit of both?
It's been a bit of both. I think you've seen, for example, in the US, quite a novel approach being taken. So companies like MP Materials receiving funding from the Trump administration. But also more recently, we've seen private critical raw materials companies also being given private funding as well.
What a terrific briefing. Thank you so much for joining us. Katherine Ogundiya, they're a thematic investing analyst at Barclays. Now, coming up, we discuss the outlook for the UK and global real estate with Jonathan Goldstein, Chief Executive and co-founder of Cain. A very quick look also at the markets. Again, there's quite a lot going on without much data. That means that it could be risky for certain investors. So today, stocks are climbing. Again, dip dyers seem to be back for a second time in a pretty volatile week, seizing on fears of lofty valuations and cooling employment in a stock market that many traders will see as supported by solid fundamentals. A reminder, markets, of course, flying partly blind amid this limited economic data during the longest U.S. government shutdown. What that means is that there's quite little clarity on the path for interest rates. European stocks down 0.2% overall, just a tiny green spot. I mean, it's flat, so we'll take it as green. The CAC 47,965 points. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The end of a dizzying week with concerns that the AI rally has gone too far. Markets also dealing with limited economic data during the longest U.S. government shutdown in history. Bloomberg understands the Netherlands is ready to ease tensions with China and drop its control of chipmaker Nexperia. In return, it wants Beijing to resume exporting critical chips. Plus, a $1 trillion pay deal for Elon Musk. Tesla shareholders approved the biggest compensation package in history, depending on his performance. So with AI investment continuing to dominate markets, the Bank of England governor has told us there's a need to watch valuations very carefully. Now, this was one of our subjects that in our conversation with Andrew Bailey. Take a listen.
What we've certainly seen over now sort of about 15 years, a bit more, is a fall, particularly in productivity growth. By the way, the UK, of course, is not unusual in this respect. I mean, a lot of other economies are in the same place. And I think in the longer run, that does come down to the whole question about innovation in the economy, investment in the economy, and it does come down to this question about whether we're going to see, something pretty substantial over time come from particularly AI and the sort of the whole tech world that's around it.
Do you worry about AI being in a bubble? And also, do you worry about private credit, of like a market event showing up?
Well, so I think, let's take AI first. It is perfectly possible that we could both see AI be the next, if you like, dial mover in terms of productivity in the economy. In this world of what I call general purpose technology, things that, in a sense, cause innovation right across the economy, just like the internet did, about steam engines did originally. And it is perfectly possible that we could get that very positive result, and it's also possible that we could get a bubble, because the market is having to value the future stream of earnings from this innovation, whatever it might be. It's perfectly possible that there will be a stream of earnings, quite a positive stream of earnings, but the market will overvalue it. I don't know, but it's something we have to watch for. So these things are not, in any sense, incompatible in that respect. So we have to watch the valuation question, obviously, very carefully. Private assets, I think there's nothing per se wrong about private assets. I think that's an important thing to say, but it is a more opaque world. So again, we do have to understand that world, and we are doing a lot of work at the bank, and will be doing a lot of work at the bank to do that. We have to understand that there are, while there's been an increase in the non-bank world, if you like, relative to the bank world, these two systems are heavily interconnected. So the banking world is still heavily interconnected. In many ways, it's the provider of liquidity, of course, to the system.
Well, that was the Bank of England Governor Andrew Bailey, who I spoke to yesterday. Now, with the UK government budget less than 3 weeks away, let's discuss the outlook for the economy and what it means for the real estate sector. With us now, Jonathan Goldstein, a chief executive and co-founder of Cain, which has nearly $14 billion in assets under management across the globe. Jonathan, as always, thank you so much for joining us. Look, you're also a labor donor, so what would you expect in that budget come November 26th?
Well, look, I think there's been a long build-up to this budget. And I think that the three things that I think the country needs to see are certainty, confidence, and competitiveness. So I think we need to get over this period. There's clearly in the economy, in the industry, across many industries, been a hiatus. People are waiting to see what's happening, waiting to hear. There's a huge amount of balloons being floated around in the press about so many different taxes, so many different spendings and cuts and investments. So I think this build-up has really been a long one. So I think what the country really needs is certainty. We need to get back to absolutely knowing the direction of travel. We need to understand what drives the economy. We need to make sure that those aspects are enforced. And we need to retain a level of confidence. This is a great country with huge amount of assets, and we really need to be playing to them.
So first of all, how much was the abolition of the non-dom regime damaging to entrepreneurship, to wealthy investors leaving the country?
Well, you've seen around the world a flight of millionaires to the UAE, to Italy, to the US, at the expense of London. And if you look at the top end of the London residential market, you'll find it's very sluggish, very, 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 very slow. And the reality is that we live in a very mobile world. Our ability to move around the world today is unparalleled. And as a result, we need to understand our relative place in that competitiveness area is hugely important. And we can't sort of think that we're an island that people are just going to come to whatever, because people can up and go. And we're seeing too many stories of founders of companies upping and going and leaving this country. And that has a significant impact on productivity, and that eats into confidence in the country.
So I know you want certainty, you want to basically the budget to happen now so that people can, adapt and get on with their business. But what do you want to see in the upcoming autumn statement?
Well, ultimately, I think we all understand that the Chancellor needs to raise revenue. We need to feel, unlike last year, that this is a one-off, that there is a line drawn under that process. And if that has to be, as is clearly being floated, a small rise in income tax and a break in what was said in the manifesto, I think the government has to be bold and the government has to go for it. I don't think that anybody in this country really believes that people have to be hidebound statements, we're not in business, that we made 2 or 3 years ago. I think it's obviously politically uncomfortable, but it's an important decision to make. And the second thing I would say is that we need to play to innovation. We need to make this country a place that people want to do business in and come and live in. If you look at the founder of NVIDIA, he moved from Taiwan to the US. He's created a company which is valued at almost $5 trillion. You want to come to the UK or anywhere in Europe, you have to fill in forms. You have to wait months and months and months. We are creating an environment that people don't want to come to. And I think we need to get away from that. We need to understand that the benefits of immigration are strong for this country and that we are in a global fight for talent. And we need to win that. We need to win our fair share of that. And at the moment, I don't think we are.
Jonathan, is it about the taxes? Is it about the money? Or is it about people not feeling welcome?
I think it's about the environment myself. I think, yes, taxes are an element of that. But I don't think everybody is so obsessed with the odd p in the pound to worry about that. I think we need to create an environment that, both from a business and a social perspective, this country becomes a welcoming country again. And I think that is a route that the Prime Minister really believes and goes in at his very core. And I think we need to make sure that we as a country are seen as a welcoming country. Many of us for generations are the beneficiaries of this wonderful country, and we need to make sure that that is a continuing narrative. And I'm concerned that we're seeing too much of this negativity, too much of this downing on Britain, which is, I think, creating a message around the world that we're no longer a welcoming environment.
Jonathan, Cain, your company is also an investor in logistics properties. Now, a lot of them will maybe move into data centers. Do you worry about the AI bubble and what that means for lending and what that means for some of the properties?
Well, I'm not going to really comment. I'm not the world's greatest expert on AI valuations. Obviously, they've been very strong. Fortunes have been made in the last year or two. Untold fortunes by people who are well positioned. But we are seeing in every element of our worlds the impact of AI on our businesses. What we believe at Cain is that if you are able to fuse that technology with human connectivity, because at the heart of all businesses remain people and the relationships that people create. And if you can create real estate that play to the technology and play to those personal relationships, then I think you can create great environments. Look, if you look around the world today, Amazon, not far from here, occupy many hundreds of thousands of feet, including in our properties in Shoreditch. JP Morgan have just opened up a massive new headquarters in Wall Street. These companies are bringing together the benefits of AI with human interaction, with those great things called relationships that we can still believe in, because at the heart of it, businesses are made by people.
Where do you want to be more invested in? Is it in the U.S.? I know you also have a big office development, in Miami that is benefiting from maybe people leaving New York. Like, where do you see the hot spots?
Look, we've been strong believers in South Florida since before the pandemic. We started to invest in 2017. We have the largest office block in the 830 Brickell, which is 100% leased. It's achieving extraordinary rents beyond $200 a foot when we initially budgeted $70 a foot. So, we're big believers in Miami. And if you look at Miami, why are people going there? And take that back to what we talked about with Britain: certainty of environment, safety on the streets, a sense of community. That's really what we need to be focused on in the UK. And I think that's, it's important that we re-emphasise those issues, because this is a great place to be. London is still a strong place to be. As Samuel Johnson said, when you tire of life, you tire of London. So we really need to reinforce those messages and get that confidence out from the top.
That is so true. Will people, you think, tire of New York because of the new mayor? And so are you doubling down on Miami as the destination?
But we just acquired a hotel called the Dominic, just down the edge of Soho in Tribeca in New York. And it's a 400-key hotel, so we're believers in New York. Look, I think the election of the new mayor is a challenge on many fronts, both geopolitically as well as locally. And I think he is espousing a narrative which he won't be able to live up to. We've seen that in our own country. And I think New York will outlive Mayor Mamdani by some distance. And I just think there will be shocks on that road for New York, which will have an impact and will lead to a migration to other cities. But I'm sure that New York will win out in the end.
Jonathan, I know I'm not wearing Chelsea blue, but you know I'm a fan, and you're a director at Chelsea. And the main question, actually, what happens with Stamford Bridge? Can you give us an indication of the thinking right now?
Well, the thinking remains that there's a huge amount of work being done internally. And I've always said, and you've asked the question before, that the first people that will know the outcome to that question will be the fans. It's clear that the club's been on a great trajectory, leading, to being now the World Club Champions, which is a great achievement for the manager, for the squad, for the directors of football. Done a wonderful job in bringing all that together over the summer. And the club continues to work in ensuring that Chelsea is a winning environment both across the men and women's team. And when we're ready, I'll come back and tell you.
But is moving to Earl's Court still an option, or has that ship passed?
I don't think we rule out any option at this point in time. Everything remains on the table, but clearly the most important thing is to create a legacy and a future for Chelsea for the next 100 years.
Jonathan, thank you so much for joining us, as always. Jonathan Goldstein there, the CEO and co-founder of Cain. Now, the UK's 2,500 private schools are under pressure after being hit by the imposition of 20% VAT on their fees. Bolstered by government backing, many are choosing to expand abroad in a bid to raise cash. Well, Bloomberg's Tiwa Adebayo joins us with the story. Tiwa, I know you've been working on it for quite a couple of weeks. Why are these schools so eager to open branches overseas?
Well, really, they're looking for alternative revenue streams. A lot of these schools have really recognisable centuries-old brands, and they want to see if they can capitalise on this. And opening a school abroad right now seems to be the perfect opportunity to do so. It's a sector that's booming. We've seen the number of British schools abroad triple since 2017. It's up from 51 to 151. And in terms of the profits that these schools are making, that's also exploded, reaching £29 million over the last academic year. It's worth also remembering that British private schools with charitable status, as most of them do have in the UK, they don't pay corporation tax on overseas earnings. So they're also keeping a good proportion of these earnings. So it does become quite an attractive opportunity. And when you compare that to the landscape for private schools in the UK, where we're seeing cost pressures associated with the new VAT tax, which came in January of this year, schools say that pupils are also leaving at an accelerated rate, and there's high inflation in this country. You do begin to wonder if perhaps overseas schools might be more fertile ground for British private schools at the moment.
Tiwa, what are the risks for these schools of going into business with foreign actors?
Well, the people I spoke to for this story say the main risk is being associated with these foreign business partners. As we've mentioned, these are really important and historic brands, and perhaps for some schools they risk potentially tainting their legacies by these associations. In the story that's up on the terminal about this morning, we cover a number of examples, including rugby schools' recent opening this September in Lagos, Nigeria. Now, that is being financed by a firm called the Chagari Group, whose founder has had quite a number of controversies. For example, he had to pay $1.8 million to resolve allegations that he was involved in some breaking of US election laws, and that's according to the US Department for Justice. We also cover the opening of Harrow School in New York that's set to take place soon. That's being backed by an Indian firm, Amity Education. They have been criticised heavily by US politicians about their ability really to educate people in the US, given their lack of track record in the country. So I think these schools risk not only their reputations through these associations, but they also are risking the trust of customers both abroad and in the UK, who pay quite significant sums of money to have access to that pedigree, to that history. But perhaps what they aren't expecting is that sort of proximity to controversy.
Yeah, I'm sure they are. Tiwa, thank you so much for some great reporting. Tiwa Adebayo, if you'd like to read more on that story, it's also available on the Bloomberg terminal. Coming up, the Dutch government is prepared to drop control of Chinese-owned chipmaker Nexperia if chip supplies resume. We'll have more on that with Atlantic Council's Director of Economic Foresight and Analysis, Charles Lichfield. That's next, and this is Bloomberg. Shares in British Airways parent IAG are sinking after a miss in the latest earnings, reflecting weakness in Europe and on its all-important transatlantic route. Well, for more on all this, let's get to Benedict Kamel, our global aviation managing editor. So, Benny, thank you so much for joining us. What can you tell us on IAG?
So IAG really, with a very weak set of numbers, or rather a weak reaction. I think people are spooked by what they said about the transatlantic market. This is a crucial market for British Airways, which is the prime airline, also Iberia, within the IAG group. And they said that there was some softness in that particular market, and it accounts for about a third of their global capacity, and that's obviously very important for them to maintain that market, to stay strong in that market. And it's something we've seen over the last couple of months. We've had other airlines say that yes, in particular from Europe to the US, there is some weakness. Fewer people, particularly in the leisure side of things, are traveling to the US. They might be spooked by sort of harsher immigration laws. They might generally be put off by the politics in the US. And we've seen that come down. Also on the corporate side, there is some weakness there, and that's really starting to hurt that business.
Benny, we're also looking at hundreds of cancelled flights in the U.S. after government agencies ordered airlines there to make a 10% cut in capacity as the shutdown drags on.
Yeah, so this is going to start today. We are going to see a gradual increase in these cuts. So it's not all going to happen at the same time. They will start at 4% and then sort of slowly work their way up to a 10% reduction. Just to give you a little bit of perspective, though, this means it'll be about 700 flights or so cancelled out of 25,000 movements. So airlines will find ways to sort of mitigate that. They will probably cancel some of their less popular routes. They will certainly protect their most prominent ones and their most profitable ones, particularly on international routes or key transcontinental routes. So they will find ways to sort of wiggle through this. But for passengers, it might mean longer waits. And as we head into the crucial Thanksgiving period, these situations will become a lot more pronounced, and that will raise a lot more pressure on the government to bring this shutdown to an end.
Benny, thank you so much. Benedict Kamel there, Bloomberg's global aviation managing editor. Now to the sidelines of COP30, where world leaders warn conditions could become unlivable for billions of people if immediate action is not taken. Well, Bloomberg's Sarah Wells is in Belém, Brazil. Sarah, we're a long way from when nearly 200 nations adopted the landmark Paris Agreement. What are we hearing now, 10 years on from world leaders?
So we have about 20 or 30 heads of state here in Belém to speak over yesterday and today. There's about 150 countries represented, but a relatively small proportion of those have sent their biggest person. But we have had a lot of commitments to multilateralism, as you'd expect, to the importance of addressing climate change with more urgency. We did hear from some of the Latin American leaders making some quite pointed remarks about Donald Trump. Colombia's Petro said that he's against humanity. And Brazil's President Lula, while he did not name Trump, he did talk about extremist forces spreading fake news and the problems that causes. We heard from Francis Macron on the importance of prioritizing science. And there was an interesting speech by Barbados Prime Minister Mia Mottley. She talked around trying to gain support for a new global protocol to reduce methane emissions. So it'll be interesting to see if that gets any traction over the next couple of weeks at COP30 and beyond. I would also say that leaders met to...
Sorry, Sarah, I cut you off.
That's okay. I was just going to add that leaders met to formally launch Brazil's Rainforest Fund. This is the TFFF, the Tropical Forest Forever Facility. and Norway pledged $3 billion in loans to that fund. They did put some conditions on that. They said that they would only put in 20% of the financing, but Brazil is trying to grow that fund to $25 billion over time, which they will then leverage to build a $125 billion rainforest preservation pool. So Norway was a big step in the right direction.
Sarah, thank you. Sarah Wells there at COP30 in Brazil. Now, the Netherlands prepared to suspend a ministerial order that gave it control over chipmaker Nexperia in a move that would de-escalate a fight with China. Well, joining us now is Charles Lichfield, Director of Economic Foresight and Analysis at the Atlantic Council. Also left D.C. because of the shutdown. I'm kidding. But actually, first of all, I mean, the shutdown, you have the shutdown, which no one's really talking about, the longest in history, but then you have encouraging news from China. So do these two news cancel each other out?
I think that's a very interesting way of seeing it, and it is sort of how the administration has played it in the past few weeks. They had a big, successful trip to the Asia-Pacific, did a lot of deals, although some of them are only temporary truces, and this has given them some respite from the crisis at home, where, and this is surprising from a historical perspective, the party that is causing the shutdown, the Democrats, has not lost any popularity, and we're now weeks in. People have missed more than one paycheck at this point, and the Democrats are not losing out in the polls. Why? Because the reasons they're sticking out are popular, including in red states. The Medicare, Medicaid financing that's been cut in the Big Beautiful Bill, people want that back. And the tax credits to the Affordable Care Act, people support those too. So you even see some Republicans saying that their party should make concessions. But you're right that the administration has managed to avoid talking about this because they've had a successful trip to Asia.
Charles, I mean, first of all, on the shutdown, how does this end? Is there an end in sight?
I think there might be an end pretty soon. Your colleague was rightly mentioning Thanksgiving coming soon and the problems that we're already starting to see on flights, not just the FAA, so air traffic control, but also security at airports. People haven't been paid several times now, and so they'll start working less. It's already pretty heroic that they're working at all. And I did manage to make it here from the US. I hope to make it back on Sunday. But yes, I think that is a deadline that's pretty serious, pretty important. And the Democrats are also feeling they're edging towards getting some concessions out of the government. So hopefully it will be soon.
On US and China, it is actually, we seem to be in a better place. I wonder how much it can just turn by 180 and we go back to the fighting that we saw 3 months ago.
I mean, things can turn with one tweet now in DC. So that is the sort of line we're on all the time. And there's a tension. There's never a dull moment. But you're right that the meeting between Xi and Trump was successful. First of all, it did take place and it was almost called off. And the deal was basically a truce. The US moved back to tariffs that the Chinese manufacturers can live with. They're still pretty high, much higher than what Europe and the UK have to deal with, but manageable. And the US managed to get a suspension of the export controls on critical minerals that we all need. This is a crucial point. The US, because of the tariffs, has leverage over the Chinese, and so the Chinese were willing to negotiate. And in some sort of magnanimous act, they lifted this export control for everyone, because it was meant to apply to everyone. Now, as we see with the Dutch case, Europe does also have some leverage, but it isn't prepared to use it as aggressively as the US.
Where do you see, I know you wrote a very interesting piece in that where it starts like you can't sugarcoat this, and this is about the relationship between the US and Europe.
Yeah, I mean, the situation is not good. This is a very tense relationship. I think we've managed to bring Trump we Europeans have managed to bring Trump closer to us on Ukraine. He isn't going to make the US government send more money to Ukraine or more weapons for free. But I think he has become much more impatient with President Putin than he was beforehand with President Zelensky. So this is progress from a European perspective. And on trade, I mean, when I came here to see you last year, Francine, I was talking about Europe preparing for a slight increase in tariffs that the US would apply on EU goods. We've gone from an average of 2.5% to a 15% flat rate, and this is seen as success. But last year, I mean, I was predicting an increase in tariffs, but this was the maximal scenario, the really catastrophic scenario in a way, and now people see this as a sort of stable scenario that Europe can deal with.
But does it mean that we're going to get second-round effects, or is it that actually with trade is a little bit like water, it always finds where it needs to go?
No, I think the European firms are already feeling the pinch, and as are US firms. And so I think we are going to continue to see slightly higher inflation in the US than we otherwise might have. And I think for investment in the US, it's also created quite a lot of uncertainty. So the end logic of the Trump model is that to manufacture in the US, manufacturing in the US avoids the tariff, and therefore European firms should invest. But we haven't seen that uptick yet because there are all sorts of uncertainties around inputs. You have to pay tariffs on them as well.
Charles, thank you so much. Charles Lichfield there, Director of Economic Foresight and Analysis at the Atlantic Council. Up next, Bloomberg Brief, and this is Bloomberg.